Welcome back. And in our top business story, a new UAE bank law for small and medium-sized enterprises is underway. That's according to a government official and is set to be finalised by the end of the year. According to a local paper, the law is expected to simplify bank loans and help regulate the sector that looks to attract investment and growth through the non-oil sector. An official quoted by the Daily stated that the law looks to strengthen the competitiveness of the UAE economy and its output, as well as boost the SME sector. Abdul Baset Al Janahi, the chief executive officer of Dubai SME, was quoted as saying that most of the commercial banks are keen on funding the working capital needs of businesses, but less on funding SME startups. He stated, therefore, that there is a need for dedicated banks to work on commercial principles, but also devoted to the financing of SME startups. Dubai and Abu Dhabi are forecast to target 5% and 7% respectively of their energy from solar and renewable sources by 2030, according to Deloitte Middle East. In a white paper released by the auditing company entitled Renewable Energy Seeds of Change, energy experts stated that the recent changes in regional policies towards renewable energy will create an abundance of opportunities for private sector companies in the GCC in the near and long term. Saudi Arabia is estimated to be diverting 800,000 barrels of its daily oil production to oil-burning power plants. At current market prices of $120 per barrel, this amounts to up to $35 billion in lost oil revenue per year as a result of not selling oil to foreign markets. As an oil-producing region, the Middle East has long been considered a net emitter of carbon. However, the Deloitte white paper indicates that this perception now appears to be changing as the region takes steps to embrace renewable energy. In the near term, several policy announcements and a push towards green energy production will be stimulated at the national and governmental levels. The Dubai International Financial Centre has issued an amendment to the regulatory law of the DIFC number 4 for the year 2004. These amendments include the review of the regulation regarding control on a category of people admitted to work in the field of financial services at the DIFC, so that the validity of the Dubai Financial Services Authority is confined to allow them to carry on their businesses through offering their services directly to individuals and companies located in the DIFC, or to enable investors outside the centre to trade without requiring a licence from them. The other amendment review looks at expanding the powers of the DFSA to include the control of auditors of public joint stock companies established in the DIFC and to subscribe and list their shares in the DIFC markets. The other amendment includes a set of regulatory requirements that will be applied to companies that offer their securities for public subscription, or those whose securities are listed for trading in the DIFC markets in line with international standards. And let's now take a look at the stock indices across the GCC.